Here's the harsh reality about cryptocurrency trading. Your biggest enemy isn't market volatility, it's not whales manipulating prices, and it's not even lack of technical knowledge. Your biggest enemy is the person staring back at you in the mirror. Every day, intelligent, educated people make terrible trading decisions because they let emotions override logic. In this comprehensive guide, I'm going to teach you the professional frameworks that institutional traders use to control their emotions, make rational decisions under pressure, and maintain discipline even when markets are going crazy. Before we dive into specific techniques, let's understand why our brains are literally wired to make poor financial decisions. Human psychology evolved over millions of years to help us survive in small tribes, not to navigate complex financial markets. The survival brain versus the trading brain. Our primitive brain is designed for immediate survival: fight, flight, or freeze. When we see our portfolio dropping 20%, this same survival system activates, flooding our body with stress hormones and forcing us into reactive mode rather than analytical thinking. Cognitive biases in trading. Professional psychologists have identified over 50 cognitive biases that affect financial decision making. These aren't character flaws. They are universal human tendencies that affect everyone from retail traders to Wall Street professionals. The emotional trading cycle. Most traders experience a predictable emotional cycle. Optimism leads to excitement, which leads to euphoria and overconfidence. Then comes anxiety, denial, fear, desperation, panic, and finally capitulation. Understanding this cycle is the first step to breaking free from it. The key insight is this: successful trading isn't about eliminating emotions, it's about recognizing them and having systematic processes to manage them effectively. Let's examine the three primary emotions that destroy trading accounts and learn professional techniques to manage each one. Fear, the paralysis. Emotion, fear manifests in multiple ways in trading: fear of losing money, fear of missing out, fear of being wrong, and fear of taking profits too early. Fear causes traders to avoid taking trades even when setups are perfect, hold losing positions hoping they'll recover, take profits too quickly on winning trades, overthink and miss opportunities. Professional fear management: pre-commit to trade, sizes and rules when markets are closed. Use mechanical systems that remove discretionary decisions. Practice visualization techniques for stressful scenarios. Maintain detailed trading journals to review fear-based decisions. Greed, the expansion emotion. Greed tricks traders into believing they can predict market movements better than they actually can. Greed-driven behaviors include position sizes that are too large, holding winning trades too long expecting bigger gains, adding to positions without proper analysis, abandoning risk management during hot streaks. Professional greed management: set profit targets before entering trades and stick to them. Use systematic position sizing. Based on account percentage, implement mechanical profit taking rules. Regularly remind yourself of past losses caused by greed, FOMO. The urgency emotion. Fear of missing out causes traders to chase prices and make impulsive decisions. FOMO behaviors include buying after large price movements have already occurred, entering trades without proper analysis due to time pressure, abandoning planned strategies to chase hot trends, increasing position sizes to make up for missed opportunities. Professional FOMO management. Maintain a watch list of opportunities and wait for proper setups. Remember that markets provide new opportunities daily. Focus on process over individual trade outcomes. Practice patience as a core trading skill. The foundation of emotional control is emotional awareness. You can't manage what you don't recognize. Here's how to develop this critical skill: the emotional check in system. Before making any trading decision, professional traders perform a quick emotional inventory. What am I feeling right now? Is this feeling influencing my analysis? Am I making this decision from logic or emotion? Would I make the same decision if I wasn't feeling this way? Physical stress indicators. Learn to recognize the physical signs of emotional trading: increased heart rate or breathing, tension in shoulders, neck, or jaw, restlessness or inability to sit still, checking positions obsessively, sleep disruption due to trading thoughts. The pause protocol. When you notice emotional activation, implement this systematic pause. Stop what you're doing immediately. Take 5 deep breaths. Ask yourself, what would a robot do in this situation? Review your predetermined trading rules. Make decisions based on your system, not your feelings. Emotional trading journal. Beyond tracking trades, maintain an emotional trading journal documenting your emotional state before, during, and after trades. Situations that trigger strong emotional responses, patterns in your emotional reactions. The relationship between your emotions and trading performance. Discipline isn't about willpower. It's about creating systems that make good decisions automatic and bad decisions difficult. The pre-market ritual. Develop a consistent routine before market open that puts you in the right mental state. Review your trading plan and rules, identify potential opportunities and risks for the day. Set maximum risk limits for the session, practice breathing or meditation techniques. Remind yourself of your long-term trading goals. Rule-based decision making. Create specific written rules for common trading scenarios. Entry criteria that must be met before taking any position. Position sizing rules based on setup confidence and volatility. Profit taking rules that remove discretionary decisions. Stop loss rules that protect against emotional hold and hope. The trading checklist. Before every trade, use a standardized checklist. Does this setup meet all my entry criteria? Have I calculated appropriate position size? Is my stop loss level predetermined? Do I have a clear profit target? Am I emotionally neutral about this trade? Environment design. Structure your trading environment to support disciplined decisions. Remove distractions like social media and news during trading hours. Use position sizing calculators to remove mental math. Set up automated alerts rather than watching charts constantly. Keep a printed copy of your rules visible at your workstation. How you handle losses determines your long-term success more than how you handle wins. Here's the professional approach to managing inevitable drawdowns. Reframing losses. Professional traders view losses differently than amateurs. Losses are business expenses, not personal failures. Each loss provides valuable information about market conditions. Losses are the price of being in the game and capturing eventual wins. Small controlled losses prevent large, devastating ones. The loss recovery protocol. When experiencing a losing trade or drawdown, accept the loss immediately, no bargaining or hoping. Analyze what went wrong without self-judgment. Determine if it was a system failure or normal variance. Make any necessary adjustments to prevent similar losses. Return to following your system exactly as designed. Managing losing streaks. Even perfect systems experience losing streaks. Professional management includes reducing position sizes temporarily during drawdown periods, increasing focus on process rather than outcomes, seeking additional education or mentorship during difficult periods, remembering that streaks are temporary and regression to the mean occurs. Emotional reset techniques. When emotions run high after losses, take breaks from trading to regain perspective. Engage in physical exercise to reset brain chemistry. Practice gratitude for lessons learned and capital preserved. Connect with other professional traders for perspective. Developing a professional trading mindset requires specific mental frameworks that separate consistently profitable traders from everyone else. Process over outcome. Thinking. Focus on executing your system perfectly rather than the results of individual trades. Judge success by adherence to rules, not profit or loss. Understand that good decisions can have bad outcomes short term. Celebrate disciplined execution even on losing trades. View trading as a statistical game played over hundreds of trades. Probability based thinking. Train your mind to think in probabilities rather than certainties. No single trade outcome matters in isolation. Each trade is one sample in a large data set. edge comes from systematic execution over time. Variance is normal and expected in all trading systems. Long term perspective: maintain focus on long term success rather than daily fluctuations. Set monthly and quarterly goals rather than daily targets. Measure progress over months and years, not days. Invest in continuous learning and system improvement. Build wealth gradually through compound growth, professional identity. Think of yourself as a business owner rather than a gambler. Treat trading as a serious business with rules and procedures. Invest in proper tools, education, and systems. Maintain detailed records for analysis and improvement. Separate trading capital from personal expenses. Here are specific actionable techniques you can implement immediately to improve your trading psychology. Meditation and mindfulness. Regular meditation practice improves emotional regulation. Start with 10 minutes daily of basic breathing meditation. Use mindfulness techniques to observe emotions without acting on them. Practice body scan meditations to recognize physical stress signals. Consider apps like Headspace or Calm for guided sessions. Cognitive behavioral techniques. Identify and challenge negative thought patterns. Notice catastrophic thinking. This loss will ruin me. Challenge all or nothing thinking. I'm a terrible trader. Replace emotional language with factual language. Practice thought stopping techniques when rumination begins. Visualization and mental rehearsal. Prepare for challenging scenarios through mental practice. Visualize yourself executing perfect trades under pressure. Rehearse your response to various market scenarios. Practice seeing losses as normal business expenses. Imagine yourself maintaining discipline during emotional moments. Support systems. Build networks that support professional development. Join trading communities focused on education rather than tips. Find mentors who demonstrate consistent discipline. Consider working with sports psychologists who understand performance. Create accountability partnerships with other serious traders. Every trader needs a personalized approach to managing their unique psychological challenges. Here's how to create yours. Self assessment. Honestly evaluate your psychological strengths and weaknesses. Which emotions affect your trading most strongly? What situations trigger your worst decision making? When do you perform your best as a trader? What mental state produces your most disciplined trading? Custom rule development. Create specific rules addressing your personal challenges. If you struggle with FOMO, create strict entry criteria. If you hold losers too long, use automatic stop loss orders. If you take profits too early, set systematic profit targets. If you revenge trade, implement cooling off periods after losses. Daily practice routine. Develop daily habits that reinforce positive trading psychology. Morning preparation rituals, pre trade emotional check ins, post market session reviews, evening journaling, and reflection progress tracking. Monitor your psychological development systematically. Rate your emotional control daily on a 1 to 10 scale. Track the correlation between emotional state and trading performance. Notice improvements in handling stress and uncertainty. Celebrate psychological wins alongside financial wins. Mastering trading psychology is a journey, not a destination. Every professional trader continues working on their mental game throughout their career because markets constantly present new psychological challenges. Here's how to start implementing what you've learned today. First, subscribe to this channel for more professional trading education that focuses on the mental and systematic aspects of successful trading. Second, start small. Pick one technique from today's video and focus on implementing it consistently for the next week before adding additional practices. Finally, share your biggest psychological trading challenge in the comments, whether it's fear, greed, FOMO, or something else. I'll provide specific guidance tailored to your situation. Remember, your technical analysis skills will only take you so far. It's your ability to execute those skills consistently under emotional pressure that determines your ultimate success as a trader.